Hey everybody, this is Patrick Donahoe. This is a follow-up to our April was it 10th? 10th? Is it April 10th? I don't even know what the date is.
Yes.
It is April 10th. All right, this is a follow-up to the podcast we just did. So this is a video. Okay, so if you're listening to this, it probably won't make a lot of sense to you unless you're watching it. So we're just going to go through. It's going to take about 5-10 minutes. We're going to talk about a pretty significant illustration of money leaking, right? And it kind of goes along with the conversation of debt that we just had with our regular weekly podcast. So what I want to do is this is a calculator called Truth Concepts, and it talks about maximum potential, which is an individual's capacity to earn money. And basically, the intent of this is just to show where money goes. And a large part of that, in the follow-up to what we've talked about, is two types of debt: taxes and credit card debt. That's where the main money leaks that you have are. So what I want to do is kind of show you this. So everybody obviously has a capacity to earn money. If you're a doctor, your capacity might be higher than a janitor. Right? If you're an airline pilot, your capacity might be more than a secretary. So everybody has a capacity to earn money based on their level of education, based off of the value that they bring to the marketplace. And that value is solidified or rectified by the amount of money that's getting paid. Does that make sense to them? So it reflects who we are, reflects our human life value, the amount of money that we make if it's done morally and ethically. Okay? Sometimes, like a mother doesn't make any money, but the value that the mother brings to the table is significant, and obviously there's a different type of compensation for that. But when it comes to monetary value of employment, right, it's an exchange of our human life value or our talents, abilities, education, and so forth in the marketplace. So this is what this illustrates. If you go back, let's take the average 60-year-old, right? So the average 60-year-old makes, how much do you think, well, not makes, but what do you think the average wealth of a 60-year-old is today? What would you guess, Michael?
I would say it's around 50,000.
50 grand? And you know the answer, so it's like, I'm
Probably
sorry.
not a very fair question.
Right, it's 141,500. Now, statistics are statistics, and statistics obviously have human error and flaws.
Are
and
you speaking income or net worth?
Net worth, total
Okay.
net worth. Yeah, I don't think the average 60-year-old makes 141 grand a year, but net worth, total assets minus liabilities. So net worth 141,500. So what I want to do is, whether you think that's a little amount of money or a lot amount of money, I think it's a lot, but relatively speaking, it's not a lot. So, and the reason why I'm saying relatively speaking is because the income capacity of that individual over time is millions and millions of dollars. So let's look at that. If we go back 30 years ago, when this individual was 30 years old, and he was making the median income at the time, which is $17,000, okay? And we did a 4% increase. So every year he got a 4% raise, so that the last year he's at the current median income, which is about $53,000. I think it's a little bit more than that now. But if he pushed all of that money into his mattress, he would wind up with $953,000 and change in total dollars. Now, instead of putting it in the mattress, let's say that he had earned some money on the monthly income, or the money he was putting in to the mattress. Let's say instead of doing that, he put it into a bank. And let's say he was earning an average of 5%. Now, in today's dollars, 5% is a lot. But if you go back to when this guy started to earn this $17,000, I mean, he was during during the 80s. Right? During the 80s, you had super high interest rates, CDs were high, money markets were high, just savings accounts were high. Now, obviously today they're lower, but let's just average out and say that he could earn 5% interest rate. So look at how much money that accumulates to over time: $1.9 million.
Wow.
Okay, but yet the average 60-year-old only winds up with 141,500. So where does all the money go? Okay, well, obviously you see here the different cost ratios: taxes, debt, lifestyle, etc. And we're not even going to use cost and inflation because that would really depress people.
Yeah.
Right. But anyway, if you look at, if you just look at that amount of money, $2 million is $2 million. But obviously the reason why people work for money is because of what? They want to obviously spend it on something, whether it's housing or food or clothes or fun, entertainment, and so forth. Obviously, we're going to exchange our money, right? So, but let's look at some of the significant leaks or wealth transfers that we make. First and foremost, it's taxes. So, what are taxes? Taxes, in a matter of speaking, is basically the government saying, listen, we need your money so you can have a better lifestyle. And they do that because I guess they don't trust us to donate or be charitable or, obviously create a good lifestyle for ourselves. I don't know. But anyway, they tax us anyway, and, because they can threaten us with jail and all
Right.
sorts of stuff, we have to, yes, sir, we have to, we have to heed their call, right?
Appropriate topic for this coming week.
Why?
Taxes,
Oh, okay. Why? Just because it's...
April 15th.
Oh, that's true. Hey, good. Sorry, I'm totally out in the... You're right. The tax man cometh. Tax man cometh. All right, so let's look at taxes, right? What do we pay taxes on? Okay, so let's get into taxes.
More than you might think.
More than we might think. So let's just say, this guy's average income tax bracket for the federal income was 15%. But wait, he has to pay state income taxes. But wait, he has to pay FICA taxes. FICA is anywhere from 6.2 to 7.6. If you're self-employed, it can go all the way up to 12 point something, I think it is. So FICA, right? Oh, Medicare, we got Medicare in there, so that's about 30. That's 2.9%, so that's about 30. But what else do we pay taxes on? Property taxes,
Cell phone bill.
utilities taxes. You pay taxes on your water, of all things.
Yeah.
Electricity, gas. You pay sales taxes. You pay food taxes. You pay, when you buy an airplane ticket, you have 2 or 3 taxes on there.
Gas tax.
Gas taxes. I mean, seriously. So let's say the total taxes that this guy pays is 40%. Okay? So 40%, $381,000 is what goes to taxes. Okay? That's pretty significant. Okay? Now remember, look at the dollar amount. It goes from 1.9 to 1.155. Huh. How does it go from 1.9 to 1.55? There's only $381,000 in there. Okay, remember, once the tax was taken out of savings, once it could no longer earn 5%, okay, there was an opportunity cost associated. Okay, so that money could no longer accrue interest. It had to go to the tax man.
The unseen cost.
The unseen cost, or the opportunity cost. Interesting. So remember, taxes is debt in essence. It is. Right? All right, debt service. Credit cards, mortgages, car payments, boat payments, etc.
Right.
Second home payments, all money that goes to credit. It's said that 37% of every dollar goes to credit. I would guess these days it's more, but let's just go round up to 40. So we have the same amount of money. Okay. Now the 1.9 goes to 385. And this is before you, well, I guess debt, you can consider it spending money. But, obviously it's a significant, $1.6 million down the commode.
Right.
Right.
That's quite a visual representation.
Oh, yeah. Yep. So lifestyle. So lifestyle is basically everything else. It's your vacations, it's your furniture, it's your electronics, it's your food, etc. Let's say that is a let's say 15%. Okay. So now we're at 100 grand, right? So the average, obviously, net worth is 141, but 141 includes property values. It includes a car being paid off. It includes assets that maybe took debt to pay them off, right? So this is a pretty accurate representation of liquid net worth that individuals have. So it's sad. The individual had a total capacity to earn of 1.9, and a $1.8 million leaked out. So I don't mean to make light of this, because this is the situation of individuals, right? How does the infinite banking concept help individuals? Well, I think one of our expertises, Michael, is we work with a lot of business owners and real estate investors. And if you look at the tax code, it's not 18,000 pages for nothing, right? Because human beings, we're smart, right? When we see a problem, what do? We find a solution, right? So whenever a code or a statute comes out for taxes, what happens? People find a way around it.
Yep.
Why do you think there's billions and billions of dollars in the Cayman Islands, right? Why? Because people don't want to pay taxes, and they found legal loopholes.
Right.
Imagine that money, if individuals were given some sort of incentive, tax incentive, investing incentive, charitable incentive, and so forth. What if they brought that, that amount of money, even half, for a